What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD where we had these two really nice entries. Didn't trade these live, sat the session out due to not enjoying price action after FOMC and knowing that we had big red folder news on the pound due later in the day. However, there was two legit setups here. A 2R short trade, sweeping relative equal lows into a 15-minute fair value gap, and then a textbook unicorn reversal entry aiming for a balanced price range on the 15-minute time frame, leading to potentially 8R here. So really nice setups. Really worth coming back and checking these out in hindsight. Let's jump into the analysis now, see how these presented themselves. As always, we're going to start off our analysis on the 15-minute time frame, looking for our potential entry points. So we're using our session liquidity tracker indicator on TradingView, which is showing us these untapped levels of session liquidity in extended green lines. These orange boxes are new week opening gaps, and these are dating back 6 or 7 weeks, I believe, on my settings. And then we've got a fair value gap indicator showing us untapped fair value gaps as well. Links to all of the indicators that I'm using are down in the description below, along with a quick video that shows all of the various settings that I'm using. So feel free to head down there for details if you want to try and replicate my charts. Yesterday was a pretty strong move up from FOMC. So we had a move in the New York PM session, and we can see now over Asia we are consolidating in this quite tight range. So the first thing that I'm going to note is relative equal highs on the Asia high. This is some buy side liquidity, and then we've got the potential bottom of this box, the bottom of this consolidation here, as a sell side liquidity. And this is going into a fair value gap, obviously a large 15-minute fair value gap. Obviously very high up in the range. So we've had this very big pump up. It would be nice to see some kind of pullback. Looking around the optimal trade entry, which takes us into this fair value gap and this final order block, which was the news driver, the news release that propelled us higher. What I am noting is that we have swept last week's low, sorry. So this here, previous week, we're starting Monday. I don't know if you can see there. We've got our days of the week highlighted here. So this is Monday through to Friday. We put the low in last week on Friday. We've just taken this low prior to the FOMC. So that was sell side liquidity that has been swept on FOMC. So we'd put relative equal lows in the New York AM session, and then as FOMC news release was coming through, we've swept those lows and we've pulled back into the range. So this gives me the idea that we've failed to displace below last week's low. We've pulled aggressively back into the range, which immediately makes me think on a higher time frame I should be looking at last week's high, which I put in on Tuesday in the London session, which is all the way up here. That's buy side liquidity. So this is a higher time frame range now. If we look on a fib, so I'm just highlighting the whole of last week's range. We are currently in a discount. Let me just remove this fib here. So you can see anything below 50% is a discount of the range, and anything above 50% is a premium. We're going to be looking for buys in a discount and sells in a premium if we're believing we're coming up possibly to take out London high. So given that, I'm looking for potential bullish draws on liquidity, and what I'm seeing, obviously we've got this very large prominent 15-minute fair value gap, but this is overlapped with this 15-minute bullish fair value gap. So where these two overlap, we've got our balanced price range here. So this is a highly sensitive area. This is also falling over a new week opening gap as well. So I'm kind of building confluences in this area where if we did pull up, this is potential resistance. New week opening gaps are a good draw on liquidity, and so price will often be drawn back to these areas. They act like a magnet, as ICT says. So we could see price rising up here. And if we're observing this higher time frame range, so from the previous week's high to the previous week's low, we are in a discount. So potentially longing up here isn't a crazy idea. Yes, we're in a premium of yesterday's pump on FOMC, but we're still in a discount of this larger range. We've put our high of the week in on Tuesday. We've come down. We're now pulling back into the range after sweeping last week's low. So that area there, this balanced price range, is what's kind of got me as a draw on liquidity to come and rebalance a lot of this inefficiency from the drop on Tuesday. Pull back into the range, rebalance this whole area, new week opening gap, balanced price range lining up really, really nicely. They are above the 618, so they're above optimal trade entry. So that would be a potential draw on liquidity. The first thing that we need to see is price getting out of this consolidation. So we've got red folder news on the pound, but it's not happening while 8 AM. So it's much later on in the morning. So the red folder news drop isn't while here, which is after our trading window. So the London session will be over and done with by then. However, I'm conscious that price may act erratically given the fact that we've got red folder news due on the pound there, and we've had such a large pump up from FOMC. So this is why I'm hesitant to take any trades. Let's jump onto the 5-minute time frame, start scrolling through price action now and see how we break out of this range. So coming into our London session, our London window opens at 2 AM, New York time. So we're still consolidating for the first half hour or so of the London session, 2:30. Coming down, 2:35. We're into the previous new week opening gap. We're into that 15-minute fair value gap. We haven't taken this sell side yet. We've taken this swing low at the bottom of the thingy, but we've basically created relative equal lows here. It's pinned down, failed to take this low, and we are now pulling back into that range. So we're still in the consolidation. Big displacement higher. Consolidating. So eyes are on the Asia high now. Relative equal highs on the 5-minute. Buy side liquidity up here. We obviously know that we've got a draw on liquidity and a balanced price range much higher up. Continues consolidating, so we're into the new silver bullet hour, 3:30 coming up. We've just swept this high, pinning up here. So as we've swept this high, we're into the new half-hour candle at 3:30. I'm going to drop onto the 1 minute and look for our potential reversal pattern here. Now, at the moment, our breaker block is right down here, which is a long way away. Back inside the previous consolidation. Price continues. Now, we're into a premium here of the larger range. So this is our first tap into a premium of that previous weekly range. The breaker block is now this candle here if we are going to have a reversal. This is the last down closed candle that leads to a new swing high. Swing low into a swing high. Broken the breaker block, time wise 3:42. So we've come into a premium of that weekly range. We've come back, we've closed over a bullish fair value gap here. Let me turn on the other fair value gap indicator because that one's not working. So we can see we had a bullish fair value gap here, which is now closed. So this is now potentially an inversion fair value gap. Price comes and retests that. We could anticipate it acting as a resistance. We've left a bearish fair value gap above this. We've closed through this order block, so this is now a breaker block. We've left another fair value gap, so we've got a fair value gap inside a breaker. So this is our unicorn entry, time wise 3:43. So we're coming up to the open of a new 15-minute candle. So this would be an entry short at this point, bottom of the breaker block. Anywhere kind of 3 minutes either side of a 15-minute candle, I'm happy. I'm going to use breaker block as my first PD array. Second PD array is the bearish fair value gap. I need to cover the high, essentially. So we've got a 5.4 pip stop loss, 5.7 pip, give it a couple of points just above the high. Targeting the opposing side of the range, which would be these relative equal lows here. So might as well go for a 2R, taking that sweep out there. So if we can get tagged in at the open of the new 15-minute candle, this would be a nice entry. Price did not tag us in. So although this got very, very close to tapping the bottom of the breaker block, the fair value gap held price down. We didn't touch the breaker block, so there's a failed entry at this point. We never got triggered into this trade, unfortunately. Price is now accelerating away at the open of the new 15-minute candle. So that would have been a really, really nice zero drawdown entry if we'd have taken the entry from the fair value gap beneath the breaker as opposed to holding out for the breaker block tap. This is something that needs kind of back testing. If you've got an overlapping fair value gap above a breaker, do you take it from the fair value gap as opposed to the breaker block? Or do you stick with an entry on the breaker? I'm not so sure on that. We've had a couple of entries that have been missed in this situation. Price accelerates lower. So coming back in towards the entry now. So we haven't been triggered into this trade. Still got the breaker block above us. Would this be a valid entry? Is it coming towards a 15-minute candle? So here we are at 4 AM. Again, price doesn't take the breaker block. It's not tapped it. So let's just check this price action because my entry was slightly wrong. So the high of this candle, we're looking at the figures up here, and the very high of this candle is 6048. The very low of the candle of the breaker block is 6048. So this has tagged this breaker block to absolute perfection, pip for pip, and then has rejected away from it. Unlikely that you would have got entered at that because of spread. It hasn't encroached into the breaker block at all. So again, you're back to the fact that you need to give yourself a few points allowing for spread below the breaker block. Something we need to consider. Price immediately, so 4 AM, well 3:59, we are pip for pip, tapping the bottom of the breaker block. Price is aggressively moving away. So look at this, the open of the new hour, aggressively driving down, take profit. So we've got our 2R, well 1.8R at that, we went for 2, it's surpassed the 2R. And we've swept the sell side liquidity. So there was a potential entry there if you'd have managed it properly, allowing for spread underneath the breaker block. There was 2 opportunities to get in on that trade. So this is just worth noting when you're planning your entries to allow for spread, because the price action can be delivered so precisely that you may not get triggered in. So at this point, I'm going to move this to one side and we are going to now look. We've swept this for our 2 hour. We're into a 15-minute breaker block. Sorry, a 15-minute fair value gap here. For a breaker block for reversal now, because we have swept a lot of liquidity here. So we've engineered tons of liquidity between the Asia and London range. So we've stacked orders. We have now cleared these orders out into a 15-minute fair value gap. So we could potentially get a reversal at this point, which is probably what I would have been more interested in. This is currently an order block. These last 2 up-closed candles, they created a swing high into a swing low. Price is now reversing. So again, see how this reacts. We are at 411, sorry. So again, we're monitoring the 15-minute cycle. So we haven't converted this into a breaker block yet. That order block has held. Price has come. It's failed to take the low, so it's not swung the low yet. Basically, got relative, relative equal lows at this point. Bearish fair value gap, overlapping a bullish fair value gap. We've got a balanced price range at that point. We would expect this to repel price. So when price taps this, there's usually an aggressive move away. So if we are bearish, this would be an ideal place for a continuation. Respecting the order block, respecting the BPR for continued move lower. Come into the BPR. We're closing through the BPR. So this now bearish fair value gap, if we close through it, is potentially an inversion fair value gap. So that bearish fair value gap has failed. The BPR did not offer the kind of rejection we were expecting. So this is signifying that we're potentially into a buy side program now. We failed to take these lows. Yes, we've engineered some liquidity down here, but we haven't had the energy, the power to break this low. Price has failed to do it. So potentially we're going to have to dig further into this range now to seek some liquidity. We've got an inversion fair value gap. We've got the order block at this point. Close through the order block. This is now a breaker block. So this order block has failed. So this is the last up closed candles that created the lowest low. So this is the highest high that led to the lowest low. This is just noise in the middle of here. Inversion fair value gap, breaker block, fair value gap inside the breaker block. So you can see we've got the bullish fair value gap there. So this is our unicorn entry. Fair value gap inside a breaker block. We've got an inversion fair value gap below us. We have an order block that we've created just here. These last two down closed candles. This is my 3 PD arrays as supporting the trade thesis. Entry would be top of the breaker block. Time wise, 23. So we're not at the open of a 15-minute candle just yet. So let's just see how this progresses, because ideally 27 to 33 is kind of the window that I'm going to be looking for an entry. The price comes up, the breaker block is tapped. So if you were going straight off the top of the breaker block, you would be in the trade now, potentially holding some drawdown if we come back, because I'm expecting volume at the 27. So price is coming in, so we've got the fair value gap. Stop loss is going to have to be below the low, 5.6 pip stop loss. We're coming in 27. We are tapped in exactly. So this is the within that 3-minute window of the 4:30 candle opening. We're into our fair value gap. So we're already in the breaker block. So I'm looking at getting tagged into some kind of PD array at the open of a 15-minute cycle. 27 is close enough for me into a fair value gap. Stop loss is going to be below these lows. Give it a little bit of breathing space. And then where would we be targeting? We're back inside this range. So we're going to be targeting the opposite side, which is going to be these highs. And we've already identified that we've got a strong draw on liquidity in this balanced price range up here. So if we are looking at attacking the previous week's high, because we failed to displace below the previous week's low, then BPR would be an easy target. 28, nice bullish candle. So we're respecting 50% of this fair value gap. So that's what we're keeping an eye on. If 50% of a fair value gap is holding, it generally means it's a strong fair value gap. So we've closed at the 50% level. We're rejecting away 429, 430, not back into the BPR, into the fair value gap, sorry. And away we go. We're into the new 15-minute candle. Get some volume coming in. First TP is going to be taking this high for a 2.3R. That's going to be TP1 buy side. Filling in these inefficiencies that we've left on this aggressive move down. So really nice, basically zero drawdown trade at the moment. So back into the lowest fair value gap. We've got an order block at this point here. Come tap the order block. Where do we tap the order block? Open of the new hour. So 4:59, we've retraced. We've come into the open of the new hour. This is outside the trading window. So my London trading window finishes at 5 AM. This wouldn't have been an entry, but look at the significance of tapping PD arrays at the open of a 15-minute candle. And then we eventually sweep through the high. So we have 5:16, this is where the volume comes in. So 15 minutes into the 5 AM candle, and then we get the volume eventually going for the high. And so there's TP1 at 2.3. And then if you were leaving runners, I would be leaving runners for the BPR for an 8.3 trade. So this is the higher time frame, BPR. Price just continues higher really nicely. We know that we've got the GBP news here coming at 8 AM. Getting very close to that BPR, so it'd be nice to get that tapped in. News hits, and we do finally fill that. And the BPR's filled straight away with 0 drawdown, so there's 8.3R. Again, the consideration would be, could we take out the previous week's high? So you've got Tuesday's high above us, previous week's high is all the way up here. If we were to be thinking that we're going to hold this running for the opposite side of the previous week's range. See what news does. As we scroll on, I mean, we're smashing through those targets. So we're nearly at this week's high. Previous week's high just above us. So I hope that was useful. It was certainly insightful for me to go back and review this session. If you did enjoy the video, leave it a thumbs up. If you've got any questions or comments, just leave them down below. And likewise, if you're enjoying the content, please consider subscribing. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.